now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of the Trader's Edge, and thanks so much for joining me. I absolutely love being here with you. This is wonderful Wednesday. Hopefully you're off to a great start of your work day or just simply your play day. Maybe it's a play day. If you're out here in Florida, the weather is absolutely beautiful. Well, it's beautiful all around the country. And folks, thanks so much for joining us. You can watch us on TigerTV. Just go to the homepage at tfnn.com. And you can click on TigerTV. You'll be able to see our charts live. You'll be able to see my screens, because learning is all about it's all audio and visual. You put those two together and you can increase you can learn at a very rapid rate. And I'm going to, today's a great day for learning. We're going to go take a look. We're going to go searching for the D points. We're going to be searching for treasure out there. We'll see what these markets are doing. This week I have talked so much about really trust. Trust is what I'll call it is. We talked about it a little bit yesterday, talked about it during the Money Master show, the time and I do. And trust is what I'll call the currency of the new global economy. But we're not going to talk so much about that. We're going to talk about the trust of the patterns that are out there in the marketplace. We're going to take a look at that. Then we can, after we go through that, we can talk about trust, or maybe I'm going to put together a special report, a special newsletter, because I think it will help everybody. No matter what business it is that you're in, you really there's not enough time spent, in my opinion, in the area of trust yet. It is all around us. It's all important. It's so important in everything that we do, because there is nothing like the speed of trust. But thanks for trusting me, tuning in here. Let's go take a look at these markets here right now, because I'm sure that's what you want to know, is what is going on out there. And if you take a look at the futures, you've got the Dow's off about 115 plus points or so. ES Mini down about 12 and 3 quarters points, trading out at 1396 even right now. You've got the NASDAQ off 22 points, Russell 2000 off 10 points, King Dollar up 43 ticks, trading out at $80.07. Gold getting smoked this morning, down $50. Of course, we knew that gold, when we took a look at that bearish engulfing candle that engulfed an entire month worth of candles, we knew that was something to pay attention to. You've got silver trading down $1.71 out at 31.54. Light sweet crude giving us a little bit of a break. $1, it's out at 102.50, on its way into that 99 area. You've got, let's see, what else do we have here? Well, we got the currencies. We're going to take a look at the currencies. Quick tour around the globe. You've got the DAX trading off 151 points. FTSE off 85. Nikkei off 230 points. You had the Shanghai up 10 points last night, and the Hang Seng up 268. I thought it was up 268 yesterday. Was the Hang Seng? Well, we'll go take a look at that. But 877-927-6648. So let's go take a look. And first, we're going to take you through this step by step, just so you can understand what it is that I believe that we should be looking at when we're taking a look at these markets. Number one, when we take a look at this screen here, folks, you can always also watch us on your iPad, your iPhone. Go to the homepage at tfnn.com, and over on the very right-hand side, you will see an area that is boxed in with some red dots. You can go ahead and click on that. You can bookmark it on your device, and then you're just simply one button away each morning from you being able to join us live. So we're taking a look at this first chart that I've got up on my screen here. This is that old correlation chart between King Dollar, the U.S. dollar index, and the ES Mini. Now, if this is just simply a 5-minute chart, just simply so you can follow along tick for tick. Now, the blue line on here is the U.S. dollar index inverted, meaning that what we have seen is when the U.S. dollar moves higher, our markets move lower. When the U.S. dollar moves lower, meaning it gets weaker, our markets move higher. So there's a correlation. And folks, this is more of a directional correlation than it is a dollar for dollar. I can't say right now you've got the U.S. dollar index trading up 41 ticks almost. I can't tell you that if it trades up 42 ticks, that that's the equivalent of a half a point on the ES Mini. What you're looking at here is just simply trying to understand the correlations that exist out in the marketplace. This one is a directional correlation. And again, this is the 5-minute chart. If you just simply go back here to last night at around 10:30, 9:30 in the evening, I can go back further if I want, but just simply that's where my chart is beginning right here. Last night around 10:30 in the evening, you can see we're live right now. 1396.75 is what the ES Mini is trading out at, and you can see from a directional standpoint that this correlation is out there. Why is that important? Well, because I'm going to put together this puzzle for you so that you can understand what's going on in the markets, and then we're going to take a look at beautiful sacred geometry. We're going to go hunting for treasure. We're going to go find some D points. We're going to understand why finding those D points, and the A to B equals CD is so important. And so let's go to our next area, because what's this all about? Well, you could say it's really all about this guy here. The king is back. Elvis is back in the building. King Dollar. You got King Dollar trading out at $80.03. Now, what you had going on yesterday, and yesterday was interesting because it was early in the morning as I got up, I don't know, maybe 4 or 5 in the morning. As I got up, we had the King Dollar trading into this candle right here, which is February 29th. First, what you're taking a look at here, you're taking a look at a Gartley sell pattern right here. This is the darker blue area, Gartley sell pattern that you've got out there. And so we simply had a sell-off. Now, if we just take a look at the A to B equals C to D on this, I can't recall if it completed one or it was just short. So A to B equals C to D. Look at that. Finishes it perfectly. Beautiful, beautiful A to B equals CD pattern, you know, which is what you really want, which is what you really need in order to be able to have a Gartley buy or a Gartley sell pattern. So the one-to-one projection on this would have been $80.96. You actually had it complete on March the 14th, got up to 81.06, closed out at 80.95. Closing out at 80.95, and the projection is 80.96. You got to love that. That's why you want to understand your ABCs. And so when we take a look at that pattern, that is a Gartley sell. What does the U.S. dollar index do? It moves down. Now, there's really 3 areas that you're going to take a look at something retracing to. 0.382, that's just your what's called a dead cat bounce. That's almost a given when the pattern starts to work. Then you've got sweet 618 and then that 0.786 retracement area. Well, when you take a look at what King Dollar was doing yesterday early in the morning, it was trading down into this candle here from February 29th. The high on that was 78.93. Now, if we just simply take a look at just a simple retracement from that low, the low of that candle, February 29th, 78.12, all the way up to the high that was actually put in on March the 15th. What you will see is the 0.786 area comes out to 78.77. Yesterday morning, it got down to a low of 78.79. 78.77 versus 78.79. And it was inside that candle. It was giving us every indication that what it wanted to do was go down and test the bottom. But no, 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 no. The king had something better in mind. And what the king did, folks, yesterday, remember early on in this show I talked about, well, gold being down $50. That's really not a surprise to us because of the bearish engulfing candle that it made. It consumed a bunch of candles, I don't know, 20, 22, 21, an entire month's worth of candles. When you take a look at yesterday's candle inside King Dollar, well, this, folks, this is a bullish engulfing candle. And what did this engulf yesterday? It engulfed 1, 2, 3, 4, 5 trading sessions. Six trading sessions. How about that? I missed one earlier this morning in my newsletter. This thing here engulfed 6 candles. That was telling us, the move to the downside was done. Well, why is that? When I say well, let's face it like this. If you are a bull, and you know that you've got this directional correlation going on, that says if King Dollar's going up, the markets are going to feel pressure. What do you have this morning? You got the markets feeling pressure. So you've got King Dollar. Let's erase some of these patterns out here. Now let's go take a look at what is it doing. It's always possible that what King Dollar is now doing is setting up an A to B equals CD up. Let's come back to that. Let's first just take a look at normal retracement levels. Normal retracement levels, you would take a look at the high out there for March 15th, come down to the low that was put in yesterday, and what you will see is King Dollar has sliced through the 0.382 area. 80.26 is the 0.618. When you see a pattern like this, when you see it start slicing through areas like this, this tells us that it maybe wants to take a quick breather. Come visit Tom and I here at Suite 618 at 601 Cleveland Street. But it's going to be going off, and it's going to go see Angie somewhere on that 8th floor at that 0.786 retracement. That would be $80.95. Well, King Dollar gets some juice in it, and this is where you have to be careful, folks, from the bullish side. Just understanding that directional indicator that's out there. It's possible what we're doing is setting up a new A to B equals C to D. Your A point would have been the low from February 29th, your high being the March 15th area, the C point being put in yesterday. Look at how right now this is traveling on the inside path here. Well, a 1-to-1 A to B equals C to D, that's going to take you all the way back up to the highs of January 13th. We'll know in the next couple of days how this pattern is going to play out, but it's looking to me like it at least wants to get to 80.95 when we get up in that range, folks. We'll see, because the candles will go ahead and they'll light our way. They will lead the path. Now, What is King Dollar all about? You can't have a king unless you've got a queen, folks. And that queen out there set up a Gartley sell pattern. Look at that candle that we see on the euro here right now. That set up a Gartley sell pattern. Maybe this is going to give us an even better signal, because when we take a look at the A to B equals, or we take a look at the retracement level coming off of our A, B equals C to D, this thing just sliced through 0.618. Not only is it on its way to 0.786, this thing closes at the 0.786 today, folks. It's going to be setting up a new A to B equals C, D down. That's in Queen Euro. Can't have a queen without a king, folks. 877-927-6648. Give us a call. We'll be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Dow futures off about 107 points right now. We're going to continue taking a tour around these markets and understand what is going on out there. Now, it's Masters Week, folks, which is great up at Augusta. I don't recall, is today Wednesday? Is this the par 3 day? Great to go. If you've never been up there, you should, and especially if you enjoy golf or love golf, there's nothing like Augusta. I suggest going up to a practice day. The Tuesday sessions, Monday sessions are great to be up there. Why? Because the guys are not under any pressure. And what they'll also do is, they'll just be playing around. They'll take different putts because they know where the flag positions are going to be. And it is amazing to see some of the contours of those greens out there and the type of roll that they have. Absolutely a fabulous tournament. So it is Masters Week this week up in Augusta. Next week, it's going to be Masters Week in Tampa. And we've got the Master Trader course. That's next Friday and Saturday, April 13th and 14th. You can get all the details on the homepage of the TFNN.com. Would love to be able to spend time with you, showing you how to identify these D points, trade these markets, and so give that a checkup. And then Masters Week is going to be up in Boston on April 27th and 28th as well. So we were talking about the Queen. We were taking a look at the euro, U.S. dollar, and what's really important to understand here is take a look at these two long-range bars that we've got right now inside the euro. You have sliced right through that 0.618 area. It sets up at least coming into here into the 0.786. Looks like that would be right around 130, 1.307. 50, something like that. Now, what this looks like, this also could be doing is setting up an A to B equals CD down. So let's go ahead and let me get rid of that retracement area. And so if we take a look at finding the D point here, a Gartley, the ultimate extension of a Gartley pattern. And see what a Gartley pattern really is, folks, is let's say that you were taking a look at the euro, and let's say that your premise in the euro was that the euro was going to continue to get weaker. You didn't buy into any strength inside the euro. In this case here, let's say you were waiting for the first sign. We talk about signs of strength. Well, in this case here, you're waiting for a sign of weakness. And let's say that sign of weakness is nothing more than your leg from the top here, which started on February 24th when the euro got up to 1.34850. And you just simply waited. You were patient because you understood the success of these Gartley patterns. And you just simply were patient and you were waiting for this leg here to finish. Well, this leg from the top out here, February 24th, all the way to the low that was put in on March the 15th. What a Gartley pattern is, then, is you're looking to go ahead and play this short. Let's say you're just waiting for the euro to play its cards. So its cards were really that first leg. What a Gartley pattern is the A to B equals CD pattern on the way back up there. It's not just a straight retracement, it's an AB equals CD pattern. Now, when we do take a look at the euro here, it did not complete a full A to B equals C. Oh, that was good. Let me get rid of that. It did not complete a full A to B equals C to D. So you may have even missed this trade because you do want to see that. A point being here March 15th, low, the high on March 21st being your B point. Your C was the next session, the low on the 22nd being at 1.31328. A 1-to-1 A to B equals C to D would have taken you right up here to 1.34134. It only got up to 1.33844. Now, but let's just use our imagination. Let's just assume that it did make that A to B equals C to D, because I do want to show you what these Gartley patterns are really all about. So you're looking at an A to B, and you're looking to just simply play the short. But what you wanted to do is you just simply were a fisher, and you were out there fishing, but you were a patient fisher. You were waiting for this pattern to complete. Well, when you do complete that A to B equals C to D, you're looking for it to complete in the 0.618 or 786 area. You see, this here got the 0.786 retracement. Now, what you're going to see is you're going to see some different exit strategies depending on what it is that you're trading. One of those exit strategies is going to be to take a look at just simply normal retracements, inside any A to B equals CD pattern, or certainly in any Gartley pattern. That first area that you're going to hit is 0.382. What you want to see when you're coming down into that area, you want to see some type of wide-ranging bar. You don't want to see small bodies, because if you see small bodies, what it tells you, it's probably going to go back all the way up here and test the area where you might have gotten into the transaction, in this case here, selling the euro short. Instead, what it did, as it got to that 0.382, closed below that, it had a wider ranging bar. You were closing towards the bottom of its session, and obviously this morning, just completely took off. That's your retracement area, your normal area to get to 0.618. What happens here, you start to get below 0.786. This is setting up a new A to B equals CD down. That A to B equals CD down, folks, we'll draw that in here for you. That'll take the euro, Queen Euro, into that 129 area, I believe is the number. Let's take a look at it here. 129 it is. A to B equals CD. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow down 119 points, S&P's off 12, Composite off 32, small caps off 11, leading the charge on the way down 1.3% right now. Microsoft down 1%, down 33 ticks. You got Intel off about a little bit above 0.5%. They're off 18 ticks. Google down $5. That's down 0.86%. Apple, that's what, somebody's taking a little bite out of Apple. Only down $5.97 right now, down just slightly under 1%. Let's take a look at what's moving out there. What's moving to the upside, you have Velocity Share, DSLV. What is that? DSLV. I don't know what that is, but that's up $2.85. That's up 9%. You've got Embraer, I believe ERJ. I believe they are the makers of airplanes. I've flown many of those. I'm not sure if I am pronouncing it properly. What you also have is, let's see, on the upside, you've got Polyport International, PPO. They're up $1.30. You've got MAGS, Maggle Security. Let's see, their Q3 revenue, $33.7 million versus $15.1 million. Not too bad. And a $4.3 million profit versus $1.5 million loss. That's pretty nice out there. That's on the upside. You've also got Monsanto, MON, the ticker symbol. They're up 84 cents. You've got Mitcham Industries, MIND. Let's see, also on the upside, you've got DDI Corp, DDIC. Let's see what's grooving to the downside. Apple leading the charge dollar-wise on the way down. SanDisk, the report yesterday didn't come out too well. They're off $4.70. That's down 9% this morning. Also, you've got, let's see here, Amazon is trading down $3.77 AMZN. You've got CMI, Cummins Inc. They're off $3. You've got Sears Holding, SHLD. They're off $3. IBM trading down $3. Polaris Industries, PII, Tesla Motors. They're trading off 8% down $3. A lot of IBM down $3. Siemens AG, SI, they're down $2.70. DaVita, DVA, they're down $2.40. Obviously, GLD down. Goldman Sachs off $2, and the Dow off 121.09. Let's go to Mike in Lakeland. Mike, thanks for calling. Thanks for holding.
Yeah. Hey, Steve. Good morning. I was going to ask you about EWP, but before I do, I just wanted to ask you. I don't know. I mean, do you think it's? I got to think that you are aware of the gravitational pull of the Federal Reserve yesterday in the Fed minutes. You are aware of that, right?
Yes. But when you say gravitational pull,
yeah.
What do you define that for me?
That specifically, they came out yesterday at around 2 o'clock, gave us the minutes of the Federal Reserve meeting of a month ago, where the Federal Reserve is at least saying in the minutes that there's going to be no QE. And we saw the dramatic. I was surprised that Tom said the market was flat yesterday. It was anything but flat. But that, I just find it a bit dishonest that, you guys talk about gravitational pull and the moon phase of this, that, and the other thing, and we know one of the biggest players is the Federal Reserve, and you guys never mention any of this.
Well,
and I just think, it's kind of like, the chicken or the egg. You guys are always focused on the egg. I mean, I just think it's, to be honest with you, I think it's dishonest. There's a lot of people that listen to you and work with their hard-earned money.
Sure.
And, you guys are short-term, bullish, short-term. You've been wrong, and flat, whatever. And I just think it's dishonest.
Well, so
I really do.
Dishonest is, dishonest is, I don't buy into that. Let's take a look at.
Well, you know what happened yesterday. You know the Federal Reserve had Fed minutes, and you've been on for half an hour, and you haven't mentioned it once. And you're talking king dollar, king this, the gold,
what?
And you know darn right well what moved the dollar and gold yesterday, and you haven't said anything in 30 minutes worth of hoot.
Well, why do look, Mike? You can say, and look, I appreciate your comments there. I don't trade based on the Fed minutes. Do you? You actually have a trading plan that you base?
You've been flat for the last 6 months.
Yeah.
And you've been flat for 6 months. You said you were long-term bullish, mid-term bullish. It took you until March, and then just last week you go short-term bullish, for God's sakes.
Well, you
guys are reckless.
No, we're not reckless at all.
You are reckless.
No, well, okay, Mike. We don't need any of that. That's fine. I appreciate your calling in. We're not going to go take a look at EWP. We're absolutely not reckless out there. So, the reality is, folks, to me, when it comes to trading, what you're looking for is you're looking to be able to trade patterns that are out there. And the pattern that you don't want to trade is all of the noise. Look, I appreciate Mike's comments, but the reality is I don't know of anyone that can actually put together a trading system based on whatever the Fed wants to do or based on whether the Fed wants to release minutes. What I can show you is patterns that are out there, absolute patterns, and money management strategies that you should use, that you absolutely should use. Whether you listen to me or you listen to somebody else to trade, you absolutely should use money management strategies that use stops in place, and you should use these patterns. Let's take a look at the patterns that are out there, talk a little bit about lunar activity, about taking a look at bullish and golf, because what's going to be able to set you apart, you see, it's all about trust. And when I hear somebody like that call, I don't hear trust with regard to a trading system. If your trust is going to be based on some minutes being released by the Federal Reserve, to me, there's no trading system out there. And what you can do, though, is you can trust A to B equals CD patterns. You absolutely can. And what you can also do, because you can see these patterns repeat time and time again, you can take a look at sacred geometry. You can take a look at how those patterns repeat time and time again. You can use lunar trading strategies. There's all types. You can use candles. Take a look at the ES Mini, because that's what's on the screen here right now. It's not about what the Fed did. In fact, I can show you, I'll do this. Let me do this here. Let me show you a pattern that is not even talked about very often. In fact, almost never. There's a candle pattern that occurred yesterday after the Fed released its minutes. Take a look at this right here. We're looking at the ES Mini. I'm just simply going to that chart since that's what we're on here right now. And you take a look at the ES Mini. This is the 2 o'clock time frame, 2 to 2:30. And this is that down candle. And so the market goes ahead and it interprets, it starts to chew on what's going on out there. And it takes a look at the ES Mini and it moves down. And then you've got this candle right here at 3 o'clock. So from 2:30 to 3 o'clock, you've got this small little body out there. Then you've got this bullish engulfing, quite frankly, that occurs in the next trading session. The market moves all the way up. In fact, it closes almost near where the Fed released its minutes, okay? This pattern here, there's something called an evening star and a morning star. Now, a morning star pattern, folks, is a 3-candle pattern. This here is a 4-candle pattern. It's not talked about by Steve Neeson. It's not talked about by too many folks that are out there. But this candle pattern here, this candle pattern is extremely bullish. Now, because it failed, folks, and is trading below that, that absolutely says that you should be able to change your opinion. What you should do when you're trading these markets is you should be able to go ahead and have a opinion about what the charts are telling you. That's all you need to do. And that opinion, you just need to be able to change it when you get additional information. Because I can't tell you what the right side of the chart is doing. What I can do is I can take a look at patterns in the left side of the chart, and I can tell you exactly what type of trade you should put on, what type of risk you should be put on, because this is running a business. And I take this so absolutely seriously about running a business. If you want to go ahead and have short-term thinking strategy and say it's all going to be based on your last trade, or your trade from 2 weeks ago, or even your trade over the last couple of months, what you're going to do is you're going to be putting too much stress and too much pressure. You're not even going to be able to be in this game. And how do I know that? Because running this is running a business. What this is absolutely, positively, 100% all about, it's running a business. Trading these markets is 80 to 90% psychological. And if you want to go ahead and you want to have the Federal Reserve be your pattern that you're going to trade off of, then you should absolutely do that. I think what you should do is you should look at patterns A, B equals C, D. You should absolutely look at that. You should understand sacred geometry, and you should understand candle patterns, because this is where the rubber meets the road. This is where the traders in the market are absolutely telling you what is going on out there. This candle pattern that we've got here, I'll go to a daily Dow chart, and what you'll see when you see this little candle pattern right here, and you won't see this candle pattern anywhere out there, folks, it has shown significant turns in markets. Now, you can learn as much from a failure as you can from something that succeeds, and that's really what trading is all about. Well, you want to take a look at where this ES Mini here is trading right now. Let me pull this in. It's trading right up against this bullish engulfing candle that came right out here at 11 o'clock in the morning on March the 30th. Now, what you've got to be careful is if this area here gets broken, and what this also, this other red line that's in here, folks, this is called apogee. This is a lunar phase. You've got apogee and perigee that's out there. My subscribers understand how to trade apogee and perigee. It is a lunar phase that absolutely works out there. You should learn how to trade that as well. But you can see this bullish engulfing candle that existed right here. Just so we talk about bullish and bearish engulfing candles, they will absolutely set you free. They give you so much information. You want to understand when those things are happening. And what you want to be able to do each and every moment when you're taking a look at a screen is you want to be able to see what information is being revealed to you. Is there a change in the pattern that's out there? And if you can do that, you don't have to listen to the Fed. You don't have to listen to the news media. All you have to do is listen to yourself and take a look at what's going on right here in front of you, right here, right now. Now, what you have to be concerned with here, we've got a caller on the line. Let's go to Glenn in San Francisco. Glenn, thanks for calling. Thanks for holding.
Hey, Steve. I just wanted to thank you. I'm a Mastering Probability subscriber, and you pointed out a pattern in the ES yesterday that I had missed, and I was able to catch it going down,
yes,
and I was able to catch it coming back up. And I had two great trades out of it. I did very well.
Well, great.
And I wanted to thank you for that because, like you talked about before, leveraging other people's time.
Yes.
You, like I said, you pointed out something I didn't see, and that gave me some great trade ideas. I was looking for a way to get in. It came up to a 618. I caught it there with very low risk.
Yes.
Wrote it down, and I didn't catch it at the 618 going up because I just felt like something would drive it further. I waited for the 786.
Yes.
I got in there, and I rode that 9 or 10 point ride back all the way up. So I want to thank you for that.
Well, and I want to thank you for being a subscriber. I want to thank you for the call, and it's great. I appreciate you doing that.
You know, in trading, you have to make some of your own decisions, and, you have to decide what's best for you and what risk you're willing to take and what the outcome could be, whether good or bad,
Oh, no, absolutely. That to me, that's really the whole part, and I put a lot of information inside the newsletter, covers a number of different things, because it really is all about, probably the best words that I've heard this morning is the mere fact that, you're out there making your own decision yourself. What risk makes sense to you, what you should be waiting, because what we're really all about here at TFNN is being able to share with you strategies, things to look at so that you can be your own fisher of trades that are out there. I mean, that's really what it's all about. In my opinion, that's what it's all about. Because when we do that, when you've taught one person, you've actually touched somebody's life. And to me, that's why we do what we do. That's why I do what I do.
So I just wanted to say thanks, and I appreciate all that you do. Apparently everybody isn't happy, but
that's okay.
I get a lot out of it.
That's great. Well, Glenn, thank you very much for calling. We appreciate that.
Take care, Steve.
Okay, have a great day. So, folks, if we do take a look at the ES Mini that's out there, this is a 30-day, and you take a look at the pattern that is out there. What's holding it right now from continuing its move down happens to be this bullish engulfing that took place out here at 11:30 in the morning on March the 30th. Now, You're below the B point. The B point was made yesterday into that 3 o'clock session as the market was kind of churning through its information as to how it wanted to go ahead and interpret the news. And what happened was the bulls absolutely stepped in after they started churning that information, because you had the ES Mini trading down to a low of 13.99, where it closed out in the 4 o'clock session as Tom was coming on the air, was back at the 14.09. It actually finished almost where just prior to the release of the Fed minutes began, and so it was the bulls stepping in again. If they had had another hour in the trading session, they might have pushed it all the way back up there. But what we did see in overnight hours, we did see King Dollar absolutely move. We saw the Queen Euro start to move down. What I want you to understand is the correlations that are inside the marketplace. Then you, like Glenn, can make your own trading decisions. What the ES Mini wants to do, the next pattern that's out there, doesn't have to do it, but the next tradable pattern that is out there is when the ES Mini gets down to 1309, 1310, because the actual price projection here is 1309.79. Maybe it's 1309.75 that it actually gets down to. Why do I say that? Well, what you're taking a look at is beautiful patterns that are out here. Here, the first pattern that was made coming off of the highs back here in March 19th, in the 2 o'clock time frame, you made a 1.272 butterfly pattern. That butterfly pattern worked well. It moved down and it moved down and it created a Gartley buy pattern. Had this nice, beautiful geometry, 2.618. You could have made money there. Then what's it do? It fails. Okay, it worked at first, then it goes ahead and fails and it makes another butterfly pattern, this 1.272, this yellow pattern that is out there. That then moves the market all the way up here into a Gartley sell pattern. That's what it did at 2:30 in the afternoon on April the 2nd. And if you take a look at the candle that's out there, it absolutely gave us a signal that that move was over. What was that signal? That was this bearish engulfing candle right here. All you need is within you now, folks, and all you need to do is pay attention to the candles, turn everything else off, except for TFNN, of course. And we do love you being here, folks. We'll be right back.
Take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. Would love to hear from you. Got the Dow trading off 104 points right now. S&P's off 10. Composite down 29. Small caps still leading the charge on the way down 1.15%, down 9.6 points. And if we take a look at the Qs, because that has been the strength in the marketplace, you've got the Qs trading out right now at $67.69 ticks. And what the Qs are doing here, the Qs have been just simply trading sideways in a consolidation range, really since the March 26 area where you had the Qs gap up. The volume there was only 40 million shares. And right now, what the Qs are doing, they're trading into really the swing point here. The Qs have an A to B equals CD up. They have a confirmed A to B equals CD up. Why do I say confirmed? Because if you look at the swing point from March 21st, what you'll see is volume of 39.6 million shares. And you gapped up into that area. You cleared that area. That's on that March 26th candle that we're looking at. The volume there just slightly higher, 40.8 million shares. Still higher volume. That confirms an A to B equals CD up. You actually confirm it again on the 29th of March with 59 million as you came back and touched that area and you've moved higher. That would actually take the Qs, need a second here to try to shrink this down, would actually take the Qs, believe it or not, into the $70, 80 cents, $71, $72 area. That's on the Qs. Right now, if we take a look at trading, markets have been open for almost 30 minutes. You've got 26 minutes. Volume today, 4.8 million shares. Is that right? 4.8 million shares. So if I do the math on that, you're looking only at about 30 million shares or so. So interesting, not enough volume here. If we just, let's go in and take a look at a 5-minute chart on the Qs, see what we're taking a look at as volume. You certainly had some volume this morning right off the get-go. That first 5 minutes, you gapped down with 1.5 million shares. But as you can see right here, you've got volume dropping off. The volume is getting lighter. So an opportunity for the markets to actually have a real opportunity to push down. It's not pushing down with volume, at least not yet. You would expect at least to see your trading inside still that swing point there from 935. You would expect the low of that to be tested before it gives you any additional information. The low there on the Qs being 67.56. Why the Qs? Because that has been the strength inside the marketplace. You want to understand what strength is doing. You also want to understand what weakness is doing. Well, weakness has been the small caps. It has been the IWM. So let's take a look at the weakness, see what weakness is doing. Weakness is going back all the way to that February 3rd price point. That's where the market gapped up. That is an important area to take notice of. Right now you're trading, you've tested the low of that. The low of that area where that gap was on February 3rd was $82.24. You did 72 million shares. So far right now you're trading at 82.37. You've done 7 million shares. So if I do my math right on that, let's see, that would be about 90 million shares. That would be on the straight line basis. So that'd be 90 million going into 72 million. It should have the volume to push down. Yet right now it has rejected price in that area. What else is that going into? Well, you got another gap that was out there on March the 23rd to the March the 26th time frame. You gapped up with 56 million shares. So the small caps, the IWM and the Qs, are the two things that you want to be watching today to give you a signal whether this is just simply going to be a continuation of a sideways move, not enough volume to bust them down and not enough volume to bust them up. Folks, absolutely great to be here with you. Have a great day. Stay tuned. Tom and I will be up next. Then we got Basil Chapman. I think we got Basil for a 2-hour deal today. David White from 3 to 4, the warm-up band for the Tom O'Brien Show. Folks, live with an attitude of gratitude, and life will be perfect. We'll be back, folks. Bye-bye.